In June of last year, I put out a video about what I thought was the most promising property type that no one was talking about at that time, single-family rental homes. With housing prices being largely unaffordable for most buyers across the country, people looking for more space and in-home offices more than ever before, and the rise of remote work allowing people to move from these densely populated major metros to smaller, more remote cities in the US, I was pretty convinced that single-family rental homes were primed for growth heading into the second half of the year. Well, fast forward about 8 months to today, and it turns out I was not the only one talking about this. And during the third and fourth quarters of last year, more private equity firms jumped into the space than ever before, and institutional investment in the acquisition and development of single-family rental homes approached $5 billion by the end of 2020. So in this video, to pick up where we left off last summer, we'll break down what is shaping up to be private equity real estate's new favorite asset class, why institutional investors are so bullish on this property type, and what I see as the biggest opportunities in the single-family home space right now for you if you're watching this channel. So as an asset class as a whole, single-family homes are on fire right now, both on the for sale and for rent sides of the spectrum. Realtor.com data shows that US median list prices are up a massive 13% year over year. The average number of days each property is listed on the market is down 16% year over year, and the total number of active listings is down 40% year over year, which really tells the overall story here of the massive decrease in supply and pent-up demand that just hasn't been able to be satisfied over the last 12 months. Even the CEO of Redfin has called this the frothiest market he's ever seen, and the company reported last month that in the 2 weeks ending on January 24th, 2021, almost 55% of listed properties were under contract within 14 days of coming on the market. And with housing prices moving to unheard of levels and a for sale housing market that has priced out many would-be homeowners out of purchasing a property even prior to all of the events that happened in 2020, this created a surge of demand for rental housing outside of just multifamily units, which has bled over into the single-family space. The US Census Bureau reported that single-family rental occupancy ended Q4 of 2020 at 94.5%, and according to Morningstar data, single-family home rents in all institutionally owned portfolios grew more than 3% annualized in 2020 as a whole, outpacing the negative national growth numbers posted by multifamily properties during that same time period. But what's really interesting about this space, aside from just the rent growth and strong occupancy numbers, is that this part of the industry is almost entirely owned and operated by private individual investors, and institutions that own more than 100 homes in their portfolio still own less than 3% of the total rental housing stock in the US, meaning that there is a massive untapped opportunity for companies that can figure out a way to acquire, build, and manage single-family homes at scale. At the end of last year, CBRE reported that institutional investment in the single-family space ended 2020 at $4.7 billion, with major investments throughout the year, including JP Morgan's $625 million JV with American Homes for Rent, Nuveen's $400 million investment with a single-family home rental platform Sparrow, and the Pretium and Ares acquisition of Front Yard Residential, an owner of approximately 14,500 single-family rental homes. Other big plays last year in the single-family home space include Rangewater Real Estate's announcement of plans to invest $800 million to develop 15 single-family for-rent communities across several Sunbelt cities in the US, and Invitation Homes and Rockpoint Group's formation of a $375 million joint venture that plans to focus on acquiring and renovating single-family homes in the West, South, and Southeast United States. And in 2020, even established multifamily players came into the single-family space, with Hunt Companies ranked as the 11th largest multifamily owner in the US in 2020 by the NMHC with over 58,000 units, also announced their own formation of a new division of the company last June, specifically created to develop single-family build-to-rent communities primarily aimed at serving renters in the affordable space. And these announcements from major real estate companies are continuing this year as well in 2021, with a few big name brokerage firms also announcing their entry into this single family home market, including JLL announcing a new team to target single family rentals in January, and Walker and Dunlop announcing their own single family home platform earlier this month. In fact, Walker and Dunlop went so far as to say they expect for rent single family home growth to surpass multifamily, office, retail, storage, and hospitality growth over the next few years, really echoing the capital plays that we've seen from major private equity firms over the last 12 months. So with this major shift in residential housing trends starting to become very real, and some of the biggest companies in the real estate industry making a bet on this space, what does this all mean for you as a real estate professional and investor, and how can you capitalize on what's clearly happening in the single family home sector today? Well, in my opinion, one of the biggest opportunities here for someone watching this channel is going to be the job opportunities that this new space in the market opens up over the next 12 to 24 months. Not only will these brokerages and investment firms that have already jumped into the sector need to hire more people to pursue these single family home opportunities, but as this product type becomes more mainstream, even more companies are going to be entering this asset class over the next few years, which is going to create leadership opportunities and really accelerated career growth for people who are willing to bring what they've learned from another shop and start or grow a new single family home platform at an existing company. And if you listened to some of my videos late last year about prop tech, I also think that the prop tech space is something that could be a huge opportunity for single family home investors, and really the differentiating factor that's going to separate the companies that are successful in this asset class versus the companies that struggle. Traditionally, the hardest part about investing in single family homes for larger investment firms has been managing these properties at scale, so a career opportunity that gets you involved with building some kind of software that can help companies manage these large-scale investments or developments easily and efficiently will put you in a really good position to grow very quickly over the next few years. And if those two things don't interest you and you're not interested in the prop tech space or working for someone else, and you want to take advantage of this shift yourself as an individual real estate investor or developer, it looks like the biggest opportunity in this space right now is happening in the Sun Belt region of the United States. Many of these institutional plays have specifically called out their plans to make these investments in the southeast corner of the country, and the price to rent ratio of existing homes and the availability and price of raw land in these regions makes this area of the country probably the most compelling region for both institutions and smaller private real estate investment firms. And as far as renter demand for this specific product type is concerned, the Southeast also appears to be leading the way here. With data sources for this asset class being relatively decentralized and sporadic at this point, Arbor Realty Trust's Q3 2020 single-family rental investment trends report actually used Google search trends as an indicator for single-family rental home demand by market, and with using updated information from February of 2021, this shows the Southeast United States as having the highest search volume for the homes for rent search term, with the top 5 states on this list including Georgia, South Carolina, North Carolina, Alabama, and Tennessee in that order. Overall, it looks like the opportunity in this sector is just heating up, and as home prices continue to rise, remote work continues to grow, and property management technology continues to improve, single-family rentals could start to make it into the conversation with some of the other main commercial real estate property types much sooner than we would have thought they would just 5 years ago. And if this sounds like an opportunity that you want to pursue and you want to learn how to model these build-to-rent residential opportunities and analyze land acquisition deals, make sure to check out the Real Estate Development Modeling Masterclass, which is going to walk you through a full build-out of a residential ground-up construction model in Excel. And if you're looking for this and more Excel and analysis training to prepare for interviews and break into a top private equity real estate shop, potentially in their single family home group this year, make sure to check out the full Break Into CRE Academy program, and I'll link that in the description below. Also, let me know in the comments where you see the single family rental space headed, and if you like this video and want to see more content on different real estate property types, make sure to hit the like button on the video and subscribe to the channel if you haven't already so you don't miss any new videos as soon as they're released. So as always, thanks so much for watching, guys. I hope you found this helpful if you're looking to take a shot at a new and growing property type, and I'll see you in the next video.